Hi, thanks for joining us today. We have VOX Royalties presenting, which I'm really excited about. Before we get started, a couple things. First, there will be a Q&A section at the end, so if you have questions, feel free to put them in the Q&A box. Throughout the presentation, we'll address those at the end, and just be aware that this presentation will contain forward-looking statements. So if you'd like to know what those are, you can check them out on the company's website in their corporate presentation, which has been updated for this presentation. So feel free to download that and follow along. Without any further ado, I'd like to introduce Kyle Floyd, CEO, and Spencer Cole, EVP of North America. Thanks for joining us today.
Well, thanks, Deb, and thanks everyone for joining for the VOX presentation. We're very excited to share with you our story. We are certainly a new story on the street, but we are far from a new company. And we went public on May 25th on the Toronto Stock Exchange Venture. We have been quietly building what is the fastest growing royalty company on the planet. Our portfolio is heavily gold focused and is one of the most significant NAV weightings for our business. We have built this company since 2014 with industry-leading IP, a technical team at its forefront, and worldwide sourcing networks that make our ability to grow, frankly, much faster, more efficient, and at better value than any of the peers in the industry. Most of our assets right now have a very heavy weighting towards safe geopolitical jurisdictions, and with that jurisdiction of main focus being Australia, where we have very serious competitive advantages. We're continuing to focus on precious metals. We will have an abundance of precious metals transactions announced over the coming months, and our NAV weighting continues to increase and future cash flows increase, with gold being the primary commodity of focus. Many of you know on the line that royalty companies have outperformed essentially any commodity-based benchmark that you can throw out for the better part of the last 20 years. This outperformance is due to a couple main factors. One, royalty interest and royalty cash flows come from the top line revenue of underlying mining operating companies and mining assets. These assets are undiluted in perpetuity in terms of their interest. This gives VOX undiluted revenue in perpetuity as these mines cash flow. The other main point of interest for royalty companies and risk-adjusted metric that makes a difference is that royalty companies are not on the hook for future capital. So as soon as when we put $1 in to buy the royalty, that's the last dollar in. Therefore, we're not on the hook for capital overruns. We're not on the hook for future development costs. So as these mines bring new production online or expand the resource or reserve base, VOX is not on the hook to pay for that. And our interest in that revenue from those new resources and reserves is undiluted, even if that mining company needs to raise money. And this is why royalty companies in general have outperformed the commodity-based benchmarks. But the point for us on this slide is that we expect to significantly outperform the other royalty companies and royalty-based industry as a whole. Something to note, and what we found very interesting when we set about doing this research, was everyone knows for the most part that Franco-Nevada, Wheaton Precious Metals, and Royal Gold have done exceedingly well since their inception. But the point to note here is that these companies have done their most damage in terms of share price appreciation in their first 3 years. And if you look at the other recent entrants, being Metalla and Mavericks in the space, their first 3 years were also highly productive, averaging about 400% appreciation in share price over that coincidental time period. VOX has built one of the most experienced teams in the emerging royalty space. Our team has almost 40 years of collective experience specific to royalty and streaming industries, and more than $1.5 billion worth of transaction value expertise, particular to royalties. Our team is also very technically focused. We have a mining engineer, a geo, and another mining engineer. Simon Cooper has worked at some of the most interesting mining operations as a geologist and mining engineer around the world, from Asia to Australia to Glencore's operations in the Congo. Spencer Cole, joining us, is also a mining engineer, and him and his former business partner, Rian Easterhuizen, who joined the VOX team in our IPO in May, founded what was known as Mineral Royalties Online, which was the largest independent proprietary database of royalties available in the market and gives VOX a significant proprietary advantage. We've also allocated our team in the most significant mining markets around the world. That's in Denver, in Toronto, in Perth in Western Australia, and then also a significant presence in Cayman. Our team, which is 6 individuals, are focused on a full-time basis, building our database and also building our advantage in terms of sourcing deal opportunities. Everybody is focused on business development. And so with 6 executives, we're able to bring more opportunities to the table and execute on those deals faster than anybody else in the market right now. As I mentioned earlier on, VOX has been the fastest growing company in the royalty industry, and this industry has tremendously rewarded growth. We have more than doubled the output of our 2 most closely tracked comps, be it Mavericks and Metalla. This growth is just not growth for the sake of growth. It's growth at tremendous value as well. We're buying deals at values not seen for the last decade. Basically, we're finding opportunities with what we call bilateral, in terms of bilateral opportunities, which means it's just us and the royalty holder or royalty owner. This allows us to have first mover advantage and not be participating in processes where the price of assets get bid up significantly, allowing us to buy assets at better value. But we're also doing this at an industry and precedent-setting growth rate for our investors. One of the key differentiating factors about VOX is that we have a significant amount of intellectual property. This intellectual property both serves us in terms of finding royalty opportunities, but also in terms of executing royalty opportunities. And Spencer Cole, being one of the founders of this intellectual property and creators of this intellectual property, Spencer, I'll let you share with everybody how this royalty database was built and how it adds value to the VOX shareholder.
Yeah, thanks, Kyle. So as Kyle alluded to, we've developed the world's largest proprietary royalty database, which numbers over 7,000 individual private royalties, and it's growing by the day. This proprietary royalty database really gives us 2 key sourcing edges. The first is first mover access to deals. As Kyle mentioned, we've been the fastest growing royalty company in the entire industry over the past 18 months, announcing 15 separate royalty transactions. And the overwhelming majority of those deals have been done on a bilateral one-on-one negotiation basis. So no other royalty buyers aware of the deal or at the negotiation table. And that's in no small part because of the sourcing edge that we get from our proprietary royalty database. Also, beyond just being able to execute bilateral deals, we've also been transacting with highly unconventional royalty holders. Last week, we announced a deal where we acquired a really exciting gold royalty from an automotive parts company. And prior to that, we've announced deals with telecommunications companies, hearing aid companies that own these really interesting royalties that are completely forgotten by the rest of the market. The second key sourcing edge that our proprietary royalty database gives us is incredible due diligence speed. We can view our global proprietary royalty database not only in a sort of Excel tabular format, but we can also view it spatially, not dissimilar to Google Earth. So when we're evaluating new royalty opportunities, we can go into our spatial viewer and within a matter of minutes, we can determine relative to a new discovery, for example, is there a royalty over the discovery? Who holds the royalty? What are the terms of the royalty? And most importantly, does the royalty actually cover the key mining claims that include the mineral deposit?
Thank you for that, Spencer. One of the key points on this slide and one of the key differentiating factors about VOX Royalty Corp is that we are growing exponentially. We're growing exponentially in terms of number of assets, number of royalty assets that we're bringing to the table for our investors, but we're also growing significantly in terms of producing assets that are organically coming up the curve for us from development stage into producing. And that will obviously lead to also exponential cash flow growth. Some of the other key points to take away is VOX is significantly precious weighted, particularly gold. And this weighting is continuing to increase as we focus on gold royalty opportunities. And lastly, as you can tell by the map, most of our assets right now are based in Australia. And that's because of a couple key factors. One, there's an abundance of gold royalties on Australia that are frankly less competitive than what we're finding in Toronto. But we also have significant sourcing advantages, both in terms of intellectual property and networks in Australia. So this weighting to what we believe is the world's best gold jurisdiction will continue for us. However, you will see also a significant amount of transactions from us in the Americas and also West Africa. Spencer, would you mind touching on our growth in terms of producing assets?
Sure thing, Carl. So as Carl touched on earlier, VOX Royalty offers a unique exponential growth curve, particularly in terms of the number of producing assets that we have just organically in our portfolio. So we expect that as we transition into 2021, there's a high probability that our number of producing assets increases from 2 to 6 assets. And importantly, when we look at those 4 incremental projects that we expect could come into production in 2021, all 4 of those are gold assets. And importantly, each of those 4 operations are low capital intensity operations. They've either got existing adjacent mills, or they provide feed to an existing processing facility. And it's just a question of when the royalty-linked mining claims will come into the mine plan. So when we view the execution risk on these 4 incremental producing assets, we view the execution risk as being relatively low. And then as we look beyond 2021, within our existing portfolio of 41 royalties and streams, we have a number of shovel-ready projects that are either at feasibility stage or rapidly advancing through pre-feasibility that we expect have strong potential to generate revenue from 2022 onwards.
Thank you, Spencer. A particular note is that VOX has assembled a very significantly diverse counterparty group that's operating our royalty interests, from Newcrest, which is a multi-billion-dollar Australian gold producer, to Mineral Resources, which is the fastest growing iron ore producer in the world. We have a list of operating counterparties that is significantly diversified and also significantly well-funded. And that's leading to, one, lower risk as we've spread that risk across many different counterparties, but also significant upside in terms of these companies are so significantly funded that they are advancing their projects faster than we expected even, and hence generating organic value in our portfolio by increasing the size or increasing the rate of development in our underlying royalty assets. Spencer, would you kindly touch on some of the highlights in our portfolio?
Sure thing, Carl. So the Koolyanobbing iron ore royalty is a producing iron ore royalty that has a revenue generation potential in the order of about $1 million per annum. And we expect that to start cash flowing in 2021 as it goes through a prepayment. 2 interesting things about that royalty deal. First is that we acquired it from a telecommunications company. And the second was that our technical due diligence team, being 2 geologists and a mining engineer, we formed a view early on that production was highly likely to be expanded. And likewise, the size of the mineral resource was also highly likely to be upgraded, both of which have within 6 months of acquiring the royalty, have come into reality. The second royalty, the Pedra Branca royalty, is the largest undeveloped platinum group metals project in all of South America. This is a really exciting development stage royalty that has potential to generate revenue in the order of about $1.5 to $2 million per annum over its mine life. This was an interesting royalty deal for a whole host of reasons that I think Carl can touch on a bit later. The Bowdens royalty, this is the largest developing silver project in all of Australia, and also has considerable revenue potential. If brought into production, could generate an additional $1 million of annual revenues. The Ashburton Gold Royalty, this is really a sleeping giant that we identified as part of a broader portfolio of 7 royalties that we transacted on earlier this year. This royalty covers a resource of 1.7 million ounces of gold, and was really a forgotten project sitting within a larger portfolio held by Northern Star Resources. We're extremely excited that within the last month, this project has changed hands to a much more agile and nimble developer. And we believe there's potential. This could become a standalone 100,000 ounce per annum gold operation. And in that scenario, it would have revenue generating potential in the order of $1.5 million to up to $3 million annual revenues as a 100,000 ounce annual operation. The Dry Creek royalty, this was a forgotten 1992 royalty that covers part of RNC Minerals' Higginsville gold operations. We sourced this royalty through our proprietary royalty database and also through intelligence that we received on the ground from our team member, Rian, who's permanently based in Western Australia. This royalty has revenue generation potential in the order of $250,000 to $500,000 per annum. And our hope is that this will come into the mine plan in 2021. And lastly, the Mount Ida royalty. This was actually a near-term producing gold royalty we acquired from a hearing aid company, if you can believe it. This has annual revenue generation potential in the order of about $500,000 per annum. And our expectation is that the operator is likely to bring this into production late 2020, early 2021.
Thank you for that, Spencer. And I think to note, of these 6 that we highlight, we have 41 royalties in the portfolio, and that amount of royalties is growing almost every single week, if not month. And 5 of these 6 royalties were significantly informed by our intellectual property, which is our royalty database. This database continues to give us a significant sourcing edge in a marketplace that's become very competitive in Toronto and Vancouver. And this edge allows us, one, to find more deals and more interesting deals in terms of royalty opportunities, but also those opportunities at much greater value than you're seeing most of our peers and counterparts in Toronto and Vancouver transacting at. We're frankly finding deals at far better value. And so why VOX and why now? VOX was established in 2014. We set about to build a team of experts in this industry, particularly as it relates to royalties, and building a portfolio of royalties that has immense value for shareholders. And we're starting to see the fruit of that labor in terms of what's already in the portfolio yielding organic growth for our shareholders. Our organic portfolio continues to surprise with the upside in terms of its development pace and catalysts. We've also achieved critical mass for our shareholders, which is a key point in time for creating shareholder value. This critical mass does a couple things for us and our shareholders. Number one, it provides diversification of risk. We are no one asset company. We have more than 41 royalties in our portfolio, which means we have significant diversification of risk. But secondly, it also is presenting significant upside opportunity organically within our portfolio that we're not paying for. There's resource expansion, there's reserve expansion, there's increases in terms of assets going from development stage to producing stage, and then increasing production as well. So for our investors, they get the benefit not just of our accretive acquisitions that we create and that we close at a faster rate than anybody else, and frankly, an unprecedented rate in the industry, but you're also getting the benefit of our organic growth in the portfolio. And so why now? Why invest in VOX over any other royalty company out there, or over the abundance of opportunities that present to investors? Right now, VOX is significantly undervalued versus its peers. On a NAV basis, net asset value basis, which is really the industry standard in terms of valuation across the sector, we're valued in the range of 1 times NAV. Meanwhile, some of our closest peers are at 2 times NAV, and as you migrate up the size curve, even up to 3 times NAV. A simple re-rating of our organic portfolio would yield a significant increase in our stock. Secondly, we are transacting faster than anybody else, with more efficiency than anybody else, at better value than any other royalty company in the market. And the market has significantly rewarded accretive growth by royalty companies. And so when you look at VOX, you have an opportunity to participate at a very early stage with a company that's realizing exponential growth in all the categories that matter for creating shareholder value. So thank you for your time. And Deborah, I think at this point we can open up for questions.
Great, yeah. Well, thank you very much. Just a reminder to everyone participating that they can input questions in the Q&A box at the bottom of your screen. And anyone that's watching on YouTube Live can email questions to info@adcap.ca, or you can leave them in the comments and I'll check there. So I don't see any questions, so I'll just start. Can you talk a little bit about the proprietary database in a bit more detail and how you came to know about it, how you found Spencer? Because I think this is really one of the biggest selling features of the company.
Yeah, I appreciate it, Deborah. I'm going to let Spencer touch on the origins of the database in a little bit more detail, but it's my opportunity to brag a little bit about the team and Spencer and Rian specifically. Spencer and Rian have been operating in the royalty space under the radar screen for the better part of the last decade. And when we came across Spencer and Rian working in the industry, we quickly saw the value and the experience and expertise that they had specific to the royalty industry. And they were responsible for more than $1 billion of royalty transactions quietly, really under the radar screen. But what they had been building was the world's largest proprietary database of royalties. And we clearly saw the value in what they had built. It took them many years to build what they brought to the table and what has really significantly increased the value for VOX. And I'll let Spencer touch on exactly how it was created, but this database gives us a very significant sourcing edge in the marketplace. It is not our only sourcing edge, but it is a very significant edge for VOX Royalty Corp and our shareholders.
Yeah, in terms of how the database has been built, it's essentially been built from first principles. We've reviewed literally tens of thousands of public filings, terabytes and thousands worth of non-public or private, exploration reports, essentially looking to isolate any specific reference to a private royalty, and then cross-checking it against the underlying mining claims that the actual royalty covers. In some cases, we even went through dusty storerooms of boxes, extremely unglamorous work, I can assure you, Deborah. But looking for that one needle in the haystack for a specific forgotten royalty, not dissimilar to that 1992 royalty that we just acquired over the Dry Creek project. So, first principles, just going through any and every shred of exploration data and report that we possibly could get our hands on, and then aggregated it into both a tabular and spatial format that we can readily search.
It's really interesting. Sounds like a lot of work went into that. How long did it take you to put that together?
It's been a work in progress over the better part of the last 6 years. But frankly, the seeds of it have been in development. Rian's been in mineral exploration for the better part of north of 20 years, and so and I think so there's fragments of it that have been in development for 2 decades plus. But really, the last 6 years, it's really started to come together.
And Deborah, I think to bring that to life for everybody on the line, if you look at some of the royalties we've acquired lately, we acquired a producing iron ore royalty from a telecommunications company. We acquired a near-term producing gold royalty from a hearing aid company. We just acquired a near-term producing gold royalty from an automotive parts manufacturer. These were royalties that have been long forgotten. And frankly, 2 out of the 3 that I just mentioned didn't even know that they owned the royalties when we approached them. And so it's given us a very significant advantage, not just to find great deals, but to find great deals at great value.
And how do they end up with these royalties? It's
a really good question. So in not dissimilar to Canada and the US, but there's stages of reorganization. So these were, I guess, what you could call them as defunct mining companies that held mining assets and then went through a restructuring, kept their interests, kept the assets that had been forgotten about. And when they were reconstituted as what had formerly been a mining company, now a shell, now into a telecommunications company, this royalty interest stayed as an asset of the business, but had been forgotten about as, in some cases, there were 2 generations of management teams between when the royalty was created and the actual management team that we bought the royalty from.
So it sits on their balance sheet as essentially no value, and they can extract value just because you pointed it out?
Exactly.
It's interesting. Okay, we're going to go to the attendees for some questions. So the slide deck said royalty sellers were interested in buying stock, can you give a bit more color on that? Are they buying the market or taking stock versus cash for a royalty?
Yeah, it's a really good question. For the most part, it is, I mean, we have had some buyers from mining companies and some of the royalty holders that we bought royalties from that really believed in our story. But the point of that mentioned in the slide deck is that there are a lot of holders of royalties that frankly prefer, when we transact, so when we're buying the royalty from them, they actually prefer to take our stock over taking our cash. And we've had that situation play out multiple times where they saw the re-rate, they saw the success of, say, a company like Mavericks that transacted with royalties using their stock and then performed very, very well for both the shareholders of Mavericks and the new shareholders that came from the royalty interest.
And then, so stock ownership, insider ownership of the company released from escrow.
Yeah, about 30% of the shares outstanding are restricted or locked up. We have about 33 million shares out. We trade around $3 a share. Management owns about 15% of the company. And one of the things that we didn't mention in the presentation is management is one of the largest groups of shareholders in this business. We're going to be the longest of long-term shareholders. We all participated in our IPO. And so every decision we make is really through the lens of a long-term shareholder and creating as much value as we can for our shareholders in our business.
And I guess the share structure, and we were on a call earlier today, which I didn't realize about the warrants. Maybe if you want to talk about that, I think that's a really big structure that you created.
Yeah, good question. So we raised 14 million, almost 14 million in the IPO. That came with a half warrant. And by the way, we have no debt, which will continue to be something that we emphasize. But that half warrant is repurchased by the company when we hit $4. So instead of there being overhang as the strike price is at $4.50, once the warrant exceeds $4 in share price, or sorry, when the share price exceeds $4, then we're actually able to go buy back the warrants and eliminate all those warrants from the balance sheet.
And just to be clear, this is not an acceleration feature of the warrant. This is actually the company purchasing the warrants.
Correct. So it eliminates any warrant overhang in terms of groups exercising the warrant and then selling the stock.
Okay, great. And then I have a couple questions about cash flow. So are you currently generating cash on the assets now, and are you expecting to cash flow over the next year on producing assets?
Yes. So we have an advanced gold royalty that's paying $1 million a year now. And then we have a producing royalty over what's becoming a very large producing graphite mine in Madagascar. We then have the Kuyunabing producing iron ore royalty that once it crosses a production threshold, which should be early 2021, will spin off around $1 million, probably a little more in cash flow. And then we are expecting 3 or 4 more cash flowing royalties, both from our development projects and then in conjunction with that, also new acquisitions to significantly increase that cash flow. We'll be coming out in the next month or so with formal guidance on what we're expecting for 2021 cash flow.
And once you are cash flowing, will you keep that cash internal for growth? Are you planning on initiating distribution of some type?
Yeah, that's a really good question, and frankly, it's of interest to a lot of investors. You know, our position right now is we have exponential growth at very accretive levels, and as long as we have that type of growth in front of us, you know, we better serve our shareholders by deploying that cash into those accretive opportunities. And so, at some point, we either become a very large dividend-paying business, or obviously an acquisition target for one of the larger multi-billion-dollar businesses in the space.
And with the royalty portfolio, do you intend to keep them as they mature, or would you sell them for the price? How do you view that portfolio? Is it a trade? Is it a long-term investment?
Yeah,
Spencer, touch on that.
I'm happy to answer that. I think, you know, we're students of history, Deb, and you know, we've back tested over 550 historical royalty deals that have cleared the market over the past 40 years. And I think historically, those who have held on to their royalties, you know, as royalty companies have outperformed the market. So it would have to be extremely exceptional circumstances for us to look to monetize any of our royalties. But like ultimately, we're here to create shareholder value. So if someone gives us an unbelievable offer for one of our royalties, and we believe that represents the best way to create shareholder value, we're not emotionally attached to any one of our royalties. We're here to create shareholder value. So never say never, but it's probably highly likely that we'll hold on to the portfolio for years to come.
Okay, and talking about shareholder value, how do you value your own company currently? And like, how do you extract that value, or how do you maximize that value for shareholders? I know growth and whatever, but like, Kyle, you've worked in this sector of the market for a very long time. I've dabbled in royalties here and there, but I don't have a strong understanding of what multiples they trade at certain times in the cycle. Maybe you can give us a sense of that, and where you see the company positioned now and where you think the potential is. Sorry, that's a convoluted question. Answer whatever part you want.
I'll let Spencer touch on that first, and then I'll fill in.
Yeah, it's a great question, Deb, and it's something we're working through with a number of sell-side research analysts at the moment, and we expect to have some research coverage coming out over the coming months. To be honest, valuing royalty companies is as much art rather than science. For our more advanced stage royalties, for approximately 15 out of our 41 royalties, for those projects, we have engineering assumptions, and whether it's feasibility studies, PEAs, pre-feasibility studies. So for those, we tend to use discounted cash flow based valuation approaches, and then I guess overlay various risks on those cash flow profiles. For the other 26 royalties that are either about to come out with engineering assumptions or are at earlier stages of exploration, when we value royalties, either when we're acquiring new royalties or just internally when we look at our sort of internal valuation, once again we leverage the benefit of having back tested and benchmarked over 550 separate royalty deals. So we'll look at potential development scenarios. So if the property has a mineral resource on it, we might run a few scenarios and say, okay, what's a likely development scenario, and then come up with a theoretical discounted cash flow scenario. Or alternatively, we'll use more of a relative valuation benchmarking exercise to come up with a sort of yardstick value for some of those earlier stage royalties.
But in terms of valuing, Deb, your question on the overall portfolio, really right now what you see is earlier entrants like, say, VOX, are typically valued based on net asset value. So the discounted cash flow approach to what we have in the portfolio, so NAV. And then, as royalty companies mature and grow, there's not a divergence away from NAV truly, but there is probably a little bit more focus on the cash flow multiple. And so as VOX continues to grow, we're trading right now at, low ones in terms of net asset value. So 1.1, maybe 1.2 times NAV, where if you look at someone like a Metalla and a Mavericks, they're trading at the higher end of, say, a 1.7 to 2 times. And then the majors like Franco and Royal are trading north of 2 and approaching 3 times NAV. So there's a very natural linear progression to valuation in this space. We look at the closest 2 comps trading at close to 2 times NAV and see natural organic re-rating of our existing portfolio, not to mention the accretive deals that we bolt on at the pace of essentially 1 deal per month. So there's a lot of multiple expansion for VOX and for our shareholders ahead.
And then as you become cash flowing and then EBITDA positive, you'll be valued on an EBITDA multiple?
Yeah, it's a cash flow based multiple, EBITDA based multiple. And what we expect really to happen with VOX is as cash flow really ramps up in 2021, entering 2022, the growth of our cash flow, given that it's exponential, we would expect really to trade at the higher end of the multiple range. And that can be 40 to 60 times cash flow, given how fast we're growing in that category.
And that type of valuation happens in like mid-cycle, end of cycle?
It's pretty consistent. If you look at royalty company valuations for the last 15 years, it's been historically anywhere from 25 times to say 45 times cash flow. And in some cases higher, depends on your growth rate. If you've got a faster than industry average growth rate, which VOX will, you can even expect higher multiples than that.
Yeah, I think one source of alpha historically has been royalty companies that have been successful in acquiring sort of later stage royalties that could come into production at varying more irregular times. That some people talk about Franco-Nevada's sort of wine cellar of attractive royalties that just come into production naturally over time. And so I guess that's sort of a thesis that we're building on is trying to acquire and develop high quality royalties that have near-term cash flow potential. Some in the next 12 to 18 months, but also some in that sort of 2 to 3 year bracket, so that when we look at our revenue projections, it is a exponential and gradual upward curve.
Got it. Well, there's one more question from the audience. If anyone has any additional ones, feel free to add them. I know this is something that we've talked about, Kyle. So listing on other exchanges, what are your thoughts? What are your inclinations?
There's a lot of value to be had from multiple exchanges, probably 2. Right now, we're exclusively on the Toronto Venture. We will absolutely list on another exchange. It's likely to be the US. I wouldn't rule out Australia, just given the amount of really quality royalties that we hold down under and the investor interest that we've had from Australia. But that being said, the most productive capital markets for royalty companies have absolutely been Canada and the US. So there would have to be a very, I would say, straightforward value proposition for us listing anywhere else. But to the question, we will probably within the next 12 months have another listing on another major exchange.
Great. So I don't see any more questions. Before we leave, maybe if you want to recap the main selling points of VOX, why you think people should invest. And,
Yeah, Deborah, really appreciate the opportunity on this webinar. I speak for both Spencer and myself. We're really excited about VOX. We've been building this company respectively for really almost 7 years now, and even longer in terms of concept stage. And we built it for shareholders. We built it for shareholders that were looking for better risk-adjusted returns in the commodity space, specifically gold and silver and precious, which we have significant weighting towards. And royalty companies have been rewarded for growth. And VOX, in terms of a growth story, is really unmatched in the marketplace right now. We will continue the increase in velocity in terms of number of transactions that we're announcing. They're all accretive. They all add significant value for our shareholders. And when you look at investing in a royalty company, the market rewards growth and it rewards quality of growth. And I don't think there's another story out there that really combines those 2 key elements at the level that VOX does. And so we expect there to be some pretty significant returns for shareholders as we continue to execute our business.
Right. I think that's a good summary. Spence, anything to add?
No, all I would say is that, to Carl's point, we are some of the largest owners of the business. And so everything we do is as shareholders, I've got 4 of my siblings who are all invested in this stock, and they said they'd murder me if it goes poorly. So, but beyond that, in all seriousness, I think another thing we really bring is discipline. So we walk away from deals every day of the week. If the deal gets too pricey, or if our technical due diligence team, finds risks associated with the project that we don't like, we'll happily walk away from deals, even if we've got them on a bilateral negotiation basis. And I think really that level of discipline, in recent years has sometimes been lacking in the royalty industry. So when we talk about providing, the purest form and lowest risk-adjusted returns in the commodity industry, I think a large part of that is having the discipline to walk away from deals, which is something we're continuing to do every day of the week.
Yeah. Well, I think from my perspective, the things that we look for are always management team, management alignment, which you have a great team, you have great alignment. We look for growth and value, which you have. But one of the unique things I think is really this proprietary database and the way that you're able to transact at lower valuations than what is current market rate. and essentially have no competition in that. So I think that's really attractive for investors to be able to have access to that kind of strategy. So thank you so much for participating. And yeah, I look forward to working with you guys more.